In today's video, I'm going to cover the estate tax and the gift tax. You're going to understand how the taxation works, when it applies, who it applies to, and all the numbers behind it. I'm Raul Shah. I'm the CEO of DocShah Financial. We are a wealth management practice that helps retirees and pre-retirees pay way less in tax than they would otherwise have to. We use a lot of advanced tax planning strategies at the firm, and this is something that I cover with every client. The slides you're viewing in the background are the same slides that I use when I teach my retirement planning course at Johns Hopkins University, which is also my alma mater. So let's go ahead and jump right in. The estate tax, very simply put, is a tax on your estate at the time of your passing. It doesn't kick in while you're alive. The gift tax, on the other hand, is a tax potentially while you are alive, but there's a lot of nuance behind that. And so I want to go ahead and kind of get both of the definitions out there. The estate tax is a tax on the value of your total estate at the time of passing. Now, that might sound a little complicated, but the estate tax doesn't kick in until $15 million. So for example, most people watching this video probably do not have an estate that is valued at $15 million. So you're going to throw everything into this calculation, your IRA accounts, your taxable brokerage accounts, the cash that you have, your business valuation and income, and all of these factors are going to comprise your estate. Now, for most of us, right, we don't have 15 million sitting in our IRA account, and so the estate tax will likely not apply. However, the estate tax will apply for those who have an estate of $15 million or more. And for every dollar in excess of $15 million, you'll pay a 40% tax rate on that estate dollar. So, for example, if your estate is at $20 million, the first 15 million are excluded. There's no estate tax, but the other 5 million from 15 to 20 million will be taxed at 40%. The estate tax is a very high tax rate. And so it's crucial to use tax planning strategies while you're alive to help mitigate that potential impact for your heirs, because ultimately the estate will pay it, not you, because you will have been deceased by this point, but your heirs will potentially get a lot less. Now remember, the lifetime exemption, which is $15 million, is per person. So a married couple has actually $30 million of a lifetime exemption that they can pass without paying any estate tax. So the estate tax will not apply up to $30 million if you are married, because remember, the lifetime exemption is $15 million per person. Now let's talk about the gift tax. The gift tax is a tax on the transfer of money, assets, or property made during your lifetime. Now remember, with the estate tax, we had what's called a lifetime exemption of $15 million. But with the gift tax, we have what's called the annual exclusion, which is $19,000 per person in 2026. The annual exclusion, by the way, is indexed for inflation. So $19,000 per person, if you're married, is your annual exclusion for the gift tax. That means that you can give $19,000 to somebody and not have to report that as an actual gift. That's the annual exclusion amount. Now, if you exceed $19,000, then you have to take the excess and file what's called IRS Form 709. It's the gift tax form. But there's still no tax owed necessarily, because you see, the tax only kicks in when you exceed the lifetime exemption of $15 million. So it's a little confusing. People get tripped up because they think gift tax, okay, I owe tax during my life if I'm gifting somebody money. And that's not always true. And in fact, for most people watching this, it's not going to be true. The lifetime exemption at $15 million, up until that point, there's no tax. If you exceed $19,000, so for example, if you gift $50,000, well, that difference of $31,000 is going to then count against your 15 million lifetime exemption. So you'll have 14 million and some change left over that will still be completely tax-free. The only time that your gift tax or estate tax comes into play is when you exceed $15 million in 1 year. Although technically you have $19,000 to give, so you'd actually be able to give a little bit more than $15 million. Now, if you do exceed $15 million in gifting during your lifetime, it's the same 40% tax rate that will apply, but this really confuses a lot of people. Remember that gifts to a spouse are unlimited, so you can transfer as much money or assets or property as you want. There's no limit for that as far as the gift tax is concerned. Gifts to a charity are also unlimited. The other thing that I wanted to mention is the annual exclusion amount, that $19,000, is per person. So if you're married, you can gift up to $38,000 per person and not have to pay or file a gift tax return. Now, here's something else to keep in mind. The $19,000 per person that you can gift to somebody, well, guess what? You can gift that to as many people as you want. So you could gift that to your friends, your family, your neighbor, in whatever quantity you feel like. So for example, if you have 5 kids, you can gift them all $19,000. 19,000 to the first kid, 19 to the second, 19 to the third, and so on and so forth. You don't have to file any gift tax return, and it's not counted against your $15 million lifetime exemption. The gift tax return must be filed when you exceed $19,000 per person. Then the excess will get held against your $15 million lifetime exemption. So remember, the biggest misconception that a lot of people have is, will I owe gift tax during my lifetime? And the answer is no, probably, because most of us watching don't have an estate or are not gifting over $15 million. So we can gift however much we want during our lifetime, and as long as we don't exceed $15 million, we're not going to pay any gift tax on that amount. So that's a big misconception that I want to clear up. Now, I want to take a look at 2 very simple examples involving the gift tax. Now, let's take a look at the left side of the screen, example 1 under the annual exclusion. So if you give $19,000 in cash to each of your 3 children in 2026, that's $57,000 in total. There's no gift tax, there's no IRS Form 709 that needs to be filed, and there's no reduction to your $15 million lifetime exemption. Most people never pay gift tax. The annual exclusion lets you transfer hundreds of thousands of dollars or millions over time tax-free without touching your lifetime exemption if you plan accordingly. And these are conversations that I have with clients at DocShah Financial, which is, how do you want to gift to your heirs over time? And how do we mitigate the potential effect of the estate tax down the line? If you use your gifting early and often, it's a fantastic legacy planning tool that makes a world of difference over the years. Now let's take a look at the right side of the screen, example 2, over the annual exclusion. Let's say you give $30,000 in cash to one child in 2026. Well, $19,000 is excluded, but $11,000 is above that annual exclusion amount. And so that's going to be used against your lifetime exemption. So still, there's no gift tax due because you're under $15 million, but you do need to file IRS Form 709 to report the $11,000 in excess over the annual exclusion. Now your remaining lifetime exemption drops to $14,989,000. So that's now the new balance that you can give tax-free and not have to pay any estate tax. So I hope this video clears up the estate tax versus the gift tax. If you want to discuss your personal situation with me and how I can help you mitigate a lot of taxations, have your portfolio managed, and really go through advanced tax planning concepts with you in great detail, shoot me an email, raul@docshahfinancial.com. I'd love to hear from you and your personal situation and how I can help. Until then, subscribe, and I'll see you in the next video.